Okay. Good morning, everybody, and happy Monday. Lots to talk about here this morning. If you've looked at the markets this morning, and hopefully you followed us along in the trade ops chat room on Friday, I think we had a hell of a forecast of what could happen here. We'll get to that here in just a second. Just make sure you guys can all hear me. All right, we're gonna wait another minute or so before we get started. Just want to make sure everyone has adequate time to log in, and then we're gonna get going. Good morning, everybody. Good morning. All right. All right, let's get started. Again, good morning, everybody. Serge Berger here from the Steady Trader. This is our Set the Market morning call. What we do, in case you're here for the first time, we take about 10-15 minutes and go through the most important things on our screens. So let's get started here with a new week. As far as this morning goes, it is really just it was more of a matter of time for this to happen. We've been talking about the risk for the unknown event, whether this is the beginning of something bigger or not. We don't know. I suspect it's going to take some time for this to be digested. But we also have earnings this week from the tech companies, Microsoft, Amazon, Tesla, and so on and so forth are going to report. So that's going to be important. So I would imagine from a pure price action perspective that this morning's ugliness in the NASDAQ 100, it was down like 4% earlier. It's bouncing a little bit here as we approach the cash session open, which is very normal, by the way, for that to happen. I suspect that once we get the initial reaction out of the way today, that we are probably going to see quieter markets on the tech stocks front on Tuesday and Wednesday until some of those names report. Obviously, we'll see, and we're open to anything to happen, but that would make sense because once this is digested this morning, and it's already been digested now, been in a digestion process since essentially since futures opened last night at 6 p.m. Eastern time, so Eastern Standard Time, so like New York time. I think once that's over, we're going to start to see some quieter markets for a couple of days. Again, we'll see what's going to happen. I can tell you right now, from a news flow perspective, you're going to get the guy that wears the colorful jackets on CNBC and the other guy that's a perma bull. They're going to say this is nothing because they will always say that. They will say that when the market's down 20% or 10% or up 10, they always say that. So ignore the news is number one. You have got to have a process. We keep talking about this. It's one thing to flock to financial TV and listen to the perma bulls. It's a whole nother to have a process that ultimately allows you to weather the storm. It's also important, and I say this probably every day 50 times to different clients, it's important to have your trading bucket and your investing bucket. And let's make sure the investing bucket is diversified. No, diversification does not mean having 40% in different tech stocks. That's not diversification. That's insanity. Okay? So it's important to be diversified somewhere and then having a trading bucket somewhere else. A lot of people are going to wake up this morning that sold, puts or something funny, on the dip on Friday, and they're going to get their heads ripped off. And I think that's what 2025 is going to be about. It's going to be a lot of oscillations back and forth. It's not necessarily about stock market crashes. That's not the point. But you're starting to see, these sort of unknown unknowns happening, and they're going to happen more in our view here in 2025. So where does this leave us all as far as what to do now? First of all, I will remind you that I can't give you investment advice, so none of this is financial advice. Please be aware this is purely educational and sort of our views here from an educational perspective. But I would watch very, very important. I would watch NVIDIA, and we've highlighted these levels. If you've been watching us here for the past couple of weeks, we've been highlighting that 150 period moving average. Why does a simple moving average matter? A lot of times it doesn't, but in this particular case, the 150 period simple moving average, the green line, it's a daily chart, obviously. since hence it's a 150 period day moving average. This is a clear level that the algorithms are watching. So this morning, and I tweeted this earlier and I posted it into the Trade Ops chat room. This morning, Nvidia is down pre-market and it's bounced a little bit. So along with the broader market, it's down from Friday's close somewhere around, let's call that 10%. So it's currently trading at 127 pre-market. 127 is literally a couple of points below this moving average. That's pre-market. Trading day hasn't even started, so no, it hasn't broken yet. Certainly not on a daily closing basis. Watch this level because it's clearly, hard to argue, a level that the algorithms watch. So again, this is a very simple moving average. It's one stock, and I hate to do that kind of analysis because it's way too simple. But when you have a market concentration that's so highly levered onto one company, where the CEO wears crocodile leather jackets to a speech in Las Vegas, which by the way is insanity. So that'll tell you something about what, kind of where he's at. Obviously a very smart guy and built a hell of a company, but it tells you where sentiment's at. And so when you have one stock that everything is correlated to, you might say, oh, I'm going to buy some AMD. Don't buy AMD. It's the same damn trade as Nvidia. All the algos have the same trade. Even uranium, which we actually own, URA, is going to get clobbered this morning because it's all the same damn trade. But at least that's an energy trade and a little bit less, purely Nvidia. So when you have that kind of market cap concentration and you have algos that go by simple moving average, which in this case they clearly do, at least that's one input, and you can see how that's held. It held in October 2023, it held in August of last year, it held in September of last year, and it once again held in December and January of this year. So the 150 period moving average is undoubtedly an important level for the algos. Whenever this breaks on a daily closing basis, and it really has to not like, don't send me an email and say, oh, it's broken by 2 pennies. It's broken. No, it hasn't broken by 2 pennies. It's ridiculous. You need to see something really properly broken here. If and when that happens, you can have further snowball effects. But it's not broken until it's broken. Remember, Nvidia is this morning is can open. It's at 127. It's the same level it was at in June. I keep saying this. The permabulls hate me. We get hate mails from people saying, but it's not about fundamentals. It's about a crowded trade. Yes, the fundamentals are probably somewhat stretched in the near term, and that's fine. It's much more about the crowded trade, right? So I would watch this level because, this is to me a very, very important point, level to watch. If it fails on a daily closing basis, and again, materially, not by 2 pennies, like it really has to actually snap. So that's what's going on here as far as that's concerned. Let me quickly take a step back, and so I would definitely not be long tech in any overweight capacity right now. Obviously, again, this is not advice, but I certainly would scale back. Again, huge tech earnings this week. Can they rally more after earnings this week? Of course they can. But you can see that the news cycle is different now. And I think it'll be very difficult for, the CEO of NVIDIA to go and wear, more crocodile leather on stage and talk up how demand is insane, I think were the words he used. The news cycle is I think, probably peaked for that. For the time being, I'm sure there's going to be another cycle for that company. That's great. But everything's tied to this one stock. So that's... is I think is the big issue. Now, I want to show you something else, and I put this on a little notepad so you guys can see this. This is really, really important. I've spoken to a lot of people over the past week, and they're all telling me the same thing. They're saying volatility is crazy in the U.S. stock market. I couldn't disagree further because it's not. This morning we're seeing volatility. What they're talking about is choppiness. And so that's the big difference. There's a huge difference between choppiness and between volatility. The VIX up until this morning, it closed on Friday at 15. That's not high volatility, right? So obviously the market's hasn't been volatile. It's been choppy. There's a huge difference between that. And so when you get choppy markets, you're going to be on the short end of the stick if you don't hold overnight positions. If you're directionally right. And so look at this. This is a statistic that I found on the Twitter sphere of the weekend. And it makes a lot of sense to me that it might be true. I haven't verified this in terms of, didn't go back to the math, but to me it makes a lot of sense. So it says since the end of 23, had you bought the S&P, the SPY, at the open of every trading day and sold it on the same day's close, you would have been down 0.1%. Remember, the SPY was up 26% in 2 years in a row. So that would have been a horrible trading strategy. But if you had bought at the close of every trading day and sold the next day's open, you'd be up. And it brings up exactly the point I try to make, guys. We're in a trading year. And so when you look at the gaps this morning, and we're going to do this, show you this morning in the Trading Ops chat room. This morning, the QQQ, or let's look at the SPY, just because that's what we're referencing here. So the SPY this morning is right now pre-market trading at 595. That sounds like a road. So 595 is here. So let me annotate this. 595 is here. So we have now overnight filled two gaps in a row. We filled the up gap from January 22nd, that's last Wednesday, and a little bit of remaining up gap from January 21st. So you can't capture these things during the day session. And that's why we have a trading year, and I think that's really important to keep in mind. So if you're going to keep overnight positions, you need to have a trading plan for that. Now, to show you what this looks like, I want to just quickly go in and show you what we did on Friday and how this is working out. So on Friday, we have our Trade Ops chat room, and I narrated this in real time. If you go into the Trade Ops chat room, I will show it to you in a second. We had a sell signal, a momentum sell signal by the TST trender that triggered at about 10:15 Eastern time. And you can see that signal worked until the end of the day. So this is where the cash session ended Friday afternoon. So basically from that point till the end of the day, NVIDIA dropped 2.6%, And of course, then this morning, the stock is down here, right? So it's now whatever, another 10% lower or whatever it is this morning. So we'll see what it brings today, but we are going to make a big deal about this, a big focus, I should say. This is the Friday after evening session. Obviously, no one trades then because everyone's going into the weekend. So I would encourage everyone to make sure you follow the intraday action as well if you want to be involved in this year's markets. You guys know I'm not a huge proponent of constantly day trading, but there is a lot of stuff happening here that we need to this year keep an eye on as far as if you want to be a trader goes. So let's just have a quick look at what the past 24 hours in terms of markets have brought. Actually, since not even 24 hours, since Sunday night. So since Sunday night, this is the S&P 500 futures. This is our TST trender. You received right out of the open, right out of the gate at 6 p.m. Eastern last night. We received a sell signal. And, if I would have held that, I'd still be, up a hell of a lot of money. But just to kind of show you, we had a sell signal that was good for about a 50 basis points drop. Then a buy signal that basically got stopped out for a very small loss. And then we received a sell signal, and this is at 10 p.m. last night, that ultimately saw the S&P futures drop as much as 2.2%. Now we're a little bit long, but I think we're going to get another push lower. So, there's a lot of opportunity when it comes to those kind of signals right now. But I think most importantly is from an allocation perspective, if you are freaking out this morning and you're panicking, which a lot of people are, then there's two things that are happening in my view. Number one, you don't have a process. So have a process, right? We're all about process here. And number two, you're clearly way overweight the correlation trade, which means you probably long NVIDIA, maybe not willingly, but because the S&P essentially represents NVIDIA and that represents everything else, you way long exposed in that. So from an investment perspective, again, this is not an investment advice, but I certainly would encourage everyone to look at their portfolio and maybe be a bit more diversified. And no, that does not mean switching from NVIDIA to AMD to Avago. That's the same trade, as I just said. And then from a trading perspective, understand we have a trading year. So, as we've been saying, we really think we're going to see a lot of up and down and up and down. And the people that are buying the V-shaped reversal and hoping for fresh all-time highs are going to get their asses kicked this year. So this morning, if you look at the futures, and obviously the cash trading session hasn't even started, but you can see we remain smack dab middle of this trading range. This is the S&P 500, and you can see we're essentially in a trading range for the most part since right after the election. So breakouts and fake outs, I think are going to be a lot more a thing this year. So let's diversify. Let's be a bit more realistic about where we are. Headline risk is a real thing, but there's a hell of a lot of trading opportunities, both on the long side and on the short side. So that much I can tell you. Last but not least, again, just reiterating what I said before, I think once the markets digest a little bit this DeepSeek or whatever it's called, the Chinese AI thing app. I actually downloaded it last night as well to have a look at. It is impressive. Once markets digest this here today, and again, global markets have already been digesting it now since last night. I would imagine that the tech stocks are going to fall into a bit of a slumber, Tuesday and Wednesday, just because a lot of tech earnings get reported on Wednesday and then on Thursday, Apple. That would be my guess. But again, this is a pretty big deal, and the correlation trade's unwinding. So, let's keep our heads on a swivel. That's important. The V-shaped reversal crowd is going to get completely destroyed this year, I think. That's why we've been making such a big deal, and I'm dancing around everywhere, making sure people understand it's a trading year this year. And buying the S&P and holding it and playing golf all years, that trade is probably over. And that's the same thing as saying NVIDIA is probably not going to go, vertical again without volatility, right? It might go up again, but not without volatility. And that's a very, very different environment that we have for the past 2 years. So please be careful. I'll see you guys over in the Trade Ops chat room. We'll be there in the next few minutes, and we'll kick off the trading week. Hope it was helpful. Please give us a thumbs up, please subscribe to the channel. Very important. Tell everyone about it. That way you get updated in real time on when we go live, and we can do a lot of this stuff this year, as you guys know. And we'll see you back here tomorrow morning, Tuesday, for another Set the Market. And again, if you remember, go into the Trade Ops chat room. We'll see you there throughout the day. So let's get going. Let's have a good week. Again, remember, it's the year of the trader. Be well.